My investment portfolio, August 2018. That is the topic of today's video. I haven't made a video like this in a long time. The last one that I did was 5 months ago, back in March. So I thought that I'd do an update and let you guys know what my holdings look like at the current time, some of the recent trades that I've been doing, as well as my portfolio composition as a whole. If you want me to do this video every single month, just let me know down in the comments below because I can certainly do that. If you're new around here, make sure you subscribe and hit that notification bell so you get notified every time that I'm posting. But for now, let's jump into it. So to start off, I just want to talk about my portfolio composition. So how much do I have in stocks or equities and how much do I have in cash? Now, when I made this video back in March of this year, I had 56% in cash and 44% in equities. Now, over the past 5 months since I made that video, a number of things have changed within my portfolio in terms of what kind of cash position I have and the size of the portfolio and that sort of thing. But in terms of the proportion of equities to cash, it has very much stayed the same. I have cash of about 54% at the current time and equities of 46%. So there's been three main things that have impacted my stock portfolio and the amount of cash and equities that are in my portfolio. And I just want to talk a little bit about each of them. So the first one is that my portfolio over the past 6 months has returned negative 2.77%. So what that has done is that it has decreased the equity position while the cash position stays the same, and that would have increased the proportion of cash to equities. And there's a few pretty simple to explain reasons why my portfolio is down 2.77% over the last 6 months. Basically, all of my individual equities have been hit with some short-term bad news, which has impacted their stock prices. For Thor Industries, the Trump tariffs on aluminium and steel have severely impacted the stock price as investors are worried that there will be increased costs associated with making RVs, which is very true. Aluminium is the biggest commodity that is used in the production of RVs. And the CEO has come out and said that there will be some cost increases associated with these tariffs. However, they're doing everything they can and they don't actually think that it will be substantial in the long term. However, this has caused a lot of investors to run away from the stock and wait until they see the extent of these tariffs. How much of an impact is it going to have on their margins? Secondly, we have YY, which just came off the last couple of years of being up 200 or 300% in just a couple of years. So I think that a lot of investors in YY were kind of looking for an excuse to take their profits. And their last quarterly report, or the quarterly report, their second quarter report, a couple of their numbers weren't great. They had slowing growth in the number of paid customers on their platform. They're a live streaming platform in China, if you don't know. And that worried a lot of investors, as well as some weaker guidance over their future quarters, and that caused a lot of investors to leave the stock. And the YY actually came out with their third quarter report last night. The numbers were amazing. They reported earnings of $2 compared to $1.80, which was expected. Their guidance was a little bit weak. And that's actually caused the stock to go down another 8% in after hours, which is not great, but people are just really scared of this stock at the moment. I still believe in it for the long term. It is a speculative position for me, so I did expect that, it could have been very volatile, so I'm not super worried about it. It's a small proportion of my portfolio, but that has also impacted my total return over the last 6 months. And the last stock was NAB Bank, which is an Australian bank. And if you're not from Australia, you probably don't know, but there has been a royal commission into the financial sector in Australia because some of the banks are doing some dodgy stuff. Some of the banks, not NAB Bank, but some of the other banks were actually charging people who had passed away, that were still charging fees to those people. So there was a lot of corrupt things happening in there. And because of that, the whole financial sector has been getting hurt on the stock market. So that's another reason why my portfolio is down. However, all of these for me are very short-term problems. They're problems that are not going to be there in 1 or 2 or 3 years, and I'm always looking at 10 or more years into the future. So I'm not worried and I'm using these opportunities in order to load up on stocks that I really believe in. So the second thing that's impacted the proportion of equity to cash is that over the past 5 months, I've made a lot of money from my other income sources. So that has increased my cash position, while my equity position is unchanged. So that again would have increased the proportion of cash to my equities. And to counteract both of those measures, I've recently been making some new investments in order to move some of that cash back into some equities, and that is why my portfolio still has the same or similar proportions of about 55% in cash and 45% in equities. All right, so now let's talk about some of those recent trades. The first one, some of you may already know, I invested in Facebook stock, and I have a couple of videos talking about that. I first spoke about it in my August stocks to buy August video, which came out a few weeks ago, so you can check that one out. And then I made a follow-up video after Facebook tanked 20%, and I started to invest after that. And there's a video on that on my channel as well, so you can check those out. But besides that, I won't talk too much about that because I spoke about that a lot in a couple of videos. But besides that, I have also been investing some more in Thor Industries. So as I just mentioned, Thor had been getting hurt by these tariffs quite significantly. So the stock peaked in January, and since then it's actually down 39%, which is a huge push down. And it's mostly due to the tariffs, but it's also due to fears that the stock is coming to the end of its economic cycle, because Thor is a very cyclical business. When there's a recession, their earnings get hit very significantly. 60, 70, 80% of their earnings will be destroyed during a recession. So a lot of people are scared of that, and investors have just taken this opportunity to profit take and get out of the stock. However, for me, I'm looking to play it for the long term. I'm not looking 2-3 years out. So that doesn't really concern me, and I'm going to use this opportunity to buy some more and average down my price. So back in March when I made that video, I mentioned that Thor made up about 47% of my equity portfolio, and I said that I didn't want it to be that big of a position. So you know what happens next. As soon as you say that you don't want it to be that big of a position, the stock tanked 40%, but I'm going to use this opportunity to buy some more. So those are the two trades that I've been doing in the last 6 months. Not a lot of activity, but they are big trades for me. Even though it's only 2 stocks, I have put a substantial amount of money behind those 2 stocks. So let's now talk about what my positions look like right now, my portfolio holdings. So I'm just going to go through each of my positions from smallest to largest. We've got to start off with NAB Bank, which is making up 5% of my portfolio. There's no real reason it's a small position. I just wanted some exposure to the financial sector, and it pays a really nice dividend. It pays about an 8% dividend. That position is 5% because it has shrunk a little bit, as I mentioned about the Royal Commission and the financial sector getting hit, but it hasn't moved too much, and it's been a really great dividend stock for me. I've had those dividends be reinvested. Next we have YY, which I want to be a small position in my portfolio because it is a speculative play. It's a brand new company, a high growth company, and it's also a foreign stock. It's on the New York Stock Exchange, but it's from China. It's based in China, so that is a very speculative position for me. So it makes up 7% of my portfolio, and I have no intention of adding to that anytime soon. So that will continue to shrink as my other positions grow. Next, we have the ASX 300. So I have about 8% of my money just invested in the top 300 companies in Australia, and the index that I use for that is VAS, which is the Vanguard Australian Shares Index, and that's just been a small position in my portfolio to give me a bit of a broader exposure to the Australian market. Next we have Facebook, which is 8.8%. This is a recent add in my portfolio, and it is a speculative play, but I don't think it's as speculative as YY, since Facebook is a massive corporation, $400-500 billion in size, compared to YY, which is just a couple of billion. Facebook's in a great financial position in terms of cash, and they're starting to diversify their income, even though the vast majority of their income is still ad revenue. So I don't think it's a huge speculative play, but I still want to keep that as a small percentage of my portfolio. And then we have my biggest position in the stock market, which is Thor Industries, which is just under 26% of my portfolio, which you might think is a lot, but the way that I invest is that I'm going to be making only 10 to 20 really significant investments throughout my life, in which I think that if I had, if I was some massive billionaire and I was buying up whole companies, which whole companies would I be confident in putting a quarter or a fifth of my net worth behind and just buying up that whole company and holding it for 20, 30, maybe even more years into the future. And that's how I feel about Thor. I think it's a no-brainer. I've looked through every single annual report. I've read through all those 80-page annual reports, quarterly reports, all the letters to the shareholders over the last 30 years. I'm really behind this company, and it's the first company that I've found that I really, really believe in for the long term in terms of their management team, their business model, and their financial position. Very low debt and a lot of cash in order to make reinvestments, expand, make acquisitions, as well as pay out those dividends to the shareholders. And lastly, the biggest asset position in my portfolio, as I mentioned earlier, is cash at 46%. And there's a couple of reasons why that is. One is that I've just been making a lot of money in terms of my income streams. And the other reason is that I'm trying to keep a significant amount of money on the sidelines so that when there is an economic downturn, I can invest large amounts into the stocks that I'm really invested in. So that's all for today, guys. I hope you enjoyed this one, and if you did, make sure you leave a like. Let me know your thoughts down in the comments below. If you're new around here, make sure you subscribe and hit that notification bell so you don't miss out on any of the great content coming out in the near future. But for now, guys, I'll see you in the next one.